we're essentially easing now into what we call core CPI or super core or core at very, very high levels. I mean, we're easing into the highest level of core CPI or super core that we've seen since the 80s. And that's pretty wacky. You've got ISM prices paid. If you look at the rate of change, Amber, of ISM prices paid, which is a great forecast on the future potentially of tariffs. Once again, you get a vertical move. And if you look at Philly Fed prices paid, Richmond Fed prices paid, you really have some tariff inflation out there, or just inflation from reshoring. You can't just like reshore all these jobs to America and not expect inflation, right? So there's all these secular changes in inflation. And so if the Fed has to reverse their very, very dovish policy, that's one thing, that's a shock. But above all, that dovish policy is creating this, what I call this Manhattan Project. Like, you think about, this is like a Manhattan Project where in the Valley, these guys, it's like a testosterone overdose. They've got testosterone going into their veins with needles. They're all trying to outspend each other because, like you said, we have relatively easy money now, right? And so people are spending money on the capital expenditures in Silicon Valley, these Mag 7 hyperscalers, as if there's really no caution to the wind, because at the end of the day, they're terrified. They want to be first, and they're determined. It's just like the Manhattan Project and coming out, toward the end of World War II with the nuclear bomb.